Hey traders, how are we doing tonight? It is 10 o'clock on June 11th, 2014, and we're going to look at some charts. This is our first video, so we're going to be pretty fluid with the format, but we're thinking we'll start off with the overall indices, give us a picture of how the day shaped up, if it was meaningful, and then look at some stocks that we were actively trading today, that we're in, and that we still have an opinion on. And lastly, I like to end with a lesson for you guys out there, if you've ever been caught like this, about screening versus charting, and how it's a big difference between what you see on your screens and what you actually see on the charts and what it means for you. So, okay, as you know, I don't normally do this. This is our first video, so we'll get started with looking at the overall market. And as you can see here, there's always a lot of counter stories, guys calling tops, people on the various blogs, stock tweets, Zero Hedge, Market Watch saying the tops. But the fact of the matter is, we are looking strong in the S&P 500, the futures. A lot of you probably trade the SPY, the ETF, which is reflective of this. So let's look at the actual underlying product here. And as you can clearly see, we're in logarithmic time frame, which I highly recommend. And a quick side note that if you were to put these charts in arithmetic time frame, they won't align the trend line. So you always want to look at logarithmic charts. As everyone knows, percentage always matters. So with that said, let's look at the S&P 500. And you can clearly see that the long-term trend line is still very much in play and hasn't really been challenged too much. I mean, we are looking here from June 2013, and that's almost 2 years ago now. And if I even go out to a weekly, you could clearly see since the crash in 2008, 2009, we hit that very low level. And then since then, we've sort of had this huge uptrending channel. You notice, though, that we are getting tighter, which means that it could become more volatile and form a higher base, or as a lot of people have been calling for it to find a peak and fall back for maybe a correction, somewhat in a bear market. But as we are medium-term to short-term traders here, so we look at what matters this month, today, tomorrow, and I'm sure you do too. If you are going to trade dailies, trade daily timeframes. If you're going to trade intraday timeframes and levels. Don't trade a daily if you are planning to only hold it for within an hour during the day for a scalp. It's just not going to work in your favor, and you're going to lose too much too fast. So with that said, we're still pretty bullish. I mean, what really gives us concern is this uptrend. It sort of hasn't hit that peak, and there's no volume surge yet, but we're looking pretty good. It looks like this is a natural attraction to 2000. I strongly feel that given the bullish sentiment in the market for the last few years and few months, and the detachment from a lot of fundamentals, I think a lot of short-term traders are going to expect the S&P 500 to at least attempt a run at 2000. So around there, I would get more cautious, but for now, I'm feeling pretty good, pretty okay. We definitely have some support at 1898.01. If we do decide to hit this upwards trend line channel and ping back and find another level, that's very possible. You can notice that SPYs have looked a lot better than the other ones. And if we go to the Russell, needs to be more of a scare here. This is the Russell 2000 futures, again in logarithmic time frame. And you can see here, same story, just a little weaker. A lot of times, traders have been saying with the last few months that the most shorted have been the best performing equities strategy, and that really is reflected in the Russell 2000. Now, what you can see is in April, May, we've had a bit of a pullback, and this pullback was more serious than the other indices, and it definitely challenged this long-standing lower trend panel. But of course, if you're patient and you knew your levels, then getting involved right here, you have a great risk reward. You have a great risk reward because you have multiple tops right here, bottoms right here, bottoms right here, and then this consolidation right here. And this line was drawn way back months ago following this. And so this is a daily strategy. If you're a swing trader, this is definitely something you want to look for. You want to be involved right here. 2% risk at max is what we do. Some of you like 5%, but I would not recommend more than 5%, which includes commissions. Coming over here, this is a good area to buy. You could see that there's that nice bounce. If you were really patient and conservative, you could wait for it to break the bounce off here, give you that confirmation that there were buyers, wait for it to break this trend line, and then look for a move further to here and here. And I think this is wave 1, 2, 3. So we might have a fourth wave pullback and then a fifth wave, if possible, if you are an L8 wave trader. But we're still looking good. You know, we are looking to regroup. And I believe if we check out the NASDAQ, which also had more of a scare than the S&P 500, it also recovered nicely, of course, nowhere near as intense as the Russell. And really that reflects the market forces and psychology. If you notice here, we had that nice kiss, that nice bounce off the trend line, where Russell, we sort of kind of tested it, debated, unsure, and then we finally broke and went up. Where the S&P 500, it was never really a debate. It just consolidated straight up and kept going, and that's what we call relative strength. So the indices are all looking good. I would be wary of these top trend lines within the next coming days, but of course, trading always involves substantial risk, and you should not take my advice as your only advice. You should do your own research. My advice is just to give you my perspective of a trader who's done it for many years and been successful at it. So I'll move to a chart that I was trading in and out of this week, and that is Green Mountain Coffee, and I labeled it for you guys here. And as you can see, same deal. You'll notice that I'm going to always love these charts that have these long building momentum channels. The longer they are, the better. What that tells me is the scales are tipped in my favor towards the bulls. Same thing works for bearish charts, although the channels tend to be have a steeper slope, and that just reflects the reality of strong selling. But it still holds true. And if you notice, I have the same trend line I've had since way back in August before this. And we had a little kiss here, which was a good trade. And that you could have held up to this trend line. And if you're still in it, where I am now, you could have waited to here. Now, the important thing is identifying these trend lines and being patient. I always like to see a combination of things. I like to see a trend line. I like to see this gap, this level. And you can see that here, this level right here, about 88, was an important deciding level. Now, I would have been calling this trade over if it had violated this upturn channel and failed the gap. You definitely do not want to see that, especially on high volume. Usually then you'll see a classic head and shoulders come in where you have a high, you have a higher high, and then if we were to say violate this trend line and make a second attempt and fail, that's when those head and shoulder plays really come in. So getting back to our trend, GMCR, I will zoom in right here for you. And you can see here that you have this nice upturn, long-term daily trend, and you have this nice consolidation. And notice the consolidation is pretty tight. It's a $100 stock, and these are on logarithmic charts. And it was fairly well controlled. The moving averages aren't moving too crazy, but you notice that we have this nice basing support. If you really are bullish on the stock and you want to get in, you could get in here and use the trend line as an out. Maybe you might get nicked out, but again, you know, trade respective of the price of the stock. This is a $95 stock. You're not going to get too big. It's going to move. You're going to have a lot of price action. So don't get too heavy. And as always, only risk 2% of your account equity on any given trade. So with that said, we were buyers here in 92.59. We like this trade. We like to see that level hold. And we had our first stop at $89. Now that doesn't mean we're fully out. This just means we came down. You don't always have to fully come out of your stops. Bottom there, we've seen this great surge, broke the upturn trend line, which is really good. And then with the news, it gapped up on pretty decent volume. And notice the increase and unbalanced volume as well. So now what we have here is the previous high of target 123.50 and nicked it. Well, we really like this. We feel this is a still bullish consolidation. We would be more worried if this did not make a new high within the next coming weeks or so, and we'd be also concerned if it broke the 110 level, which we see here has been holding. There has been buyers. There has been some accumulation. Now, what was interesting last week was this big move that kind of got completely faded back. Now, we interpret that as there's a lot of interest in this stock. There's a lot of day traders who are watching this stock, and that it can move when there is any sort of catalyst that's meaningful. And if you notice, the move was very good. I believe it was nearly a 9% move in one day, which is a lot, even for a $100 stock. And we were expecting a pullback. However, we were disappointed in the pullback here. But again, we want to reiterate that we are still very bullish, and we believe that 136, 140 is not at all unreasonable, and we are very excited for the stock. We believe in the product, and we believe in the company. So with that being said, we're pushing 10 minutes here. I'm going to then do a quick lesson that I've learned throughout the years of looking at screens versus charts, and that is with this right here. So I just switched over to a stock site called FinViz. It has some great screeners, has great futures charts, and is a wonderful resource for kind of looking at the market. We always look for unusual volume. We look up gaps of greater than 5% up or down, and price action up or down. And what you're seeing here are some selected picks we have for unusual volume with a price movement of 4% or greater today. And what I want to call your attention to is this stock right here, NWBO. Now, a lot of you might look at this, and if you have the technical charts on FinViz, you might go, "Oh, wow, this looks pretty good." You had this move here, but maybe that was news driven and that came back. Then again, you had this fade out. This thing could really move. And now I have this longer uptrend, and it looks like it broke the flag, and it's going higher. Now, all looks real good. Two things you always want to check out is the industry and the country. The country and industries are very important. Industries vary from country to country, and different countries have stronger industries than others. So make sure you want to get the right combination. USA and biotechnology has been a very hot-bedded industry, I should say, between that and solars in the United States and independent oil and energy and gas, which we will get to later. But nonetheless, biotech has been very strong in the United States, and so this is something that definitely could get you pretty interested. But what's always important before you put this down is to check the charts, check the fundamentals. It's homework. You got to do it. It'll save your butt whenever there's a big gap or down in news. You do not want to wake up in the morning and see your stock down 15, 20%. And that does happen with biotechs, and especially happens with biotechs under $10. So very big caution warning. I would very, very carefully know the company and know their release earnings times, their announcements, and follow up on the news, because you do not want to get caught with that holding a major move down. And I will not show you this today, but you can find out for yourself. Just type in biotech in the industry column in FinViz, and you will see what I'm talking about with the big downturns. But there's also a lot of upside to them, so you want to pick the right one. Getting back to NWBO, we have this chart right here which says it looks good, so I said let's look at the charts, and let's look at charts. So if I pull up my charts here, NBO, Northwest Biotherapeutics. Now, I want full disclosure, I know nothing about this company. I do not trade it, but I just thought it was a good chart to show. So I did some preliminary charts, try to match what we saw on FinViz, this nice pull, and then now here we have sort of like this up thrust. There's a level here, previous highs, you can see here, bounced, here, and here. So it's a meaningful level, this 671, 660 level. But let's go bigger. Let's see why I'm pessimistic about the stock. And what you can see here is there's not a lot. It's a relatively new issue from July of 2012, it looks like. And all that time, it couldn't build any levels. Now, I want you to think about this when you're looking at this stock. And I know a lot of people will say, well, news is different and fundamentals are different. And yes, that is very true. Things change. But while other biotechs were doing fantastic, while other stocks were doing fantastic, this has not really built anything. It kind of spikes and dumps. It has a pattern of pumping and dumping, which I really don't like. Now, if you were to tell me, oh, this stock, they believe in this company, and again, I know nothing about this company, I would like to see it building. Much better biotechs can build out. But then again, all that can change. And so what I want to say to you guys is, knowing nothing about the stock, I would wait for this one. If you know the company and you know underlying fundamentals and you think this is a good level, that has to be your choice. But ideally, I want to see a trend develop. And you could see that here too. You could say, oh, well, if I wait for the trend to develop, I'm going to miss out. And yes, that might be true, especially at 641. So that's why homework comes important. But I would counter with this. I'm not really sold on the uptrending channel. There really isn't much of a channel to speak of. It's sloppy. It's all over the place. If it does come up on news, who's not to say it's not going to pump and dump again? Stocks have these characteristics. And you always want to take that in mind when you get involved in levels, because levels can only mean so much. Stocks definitely do have a personality that a lot of traders will talk about. So we're running at 15 minutes here. That's 1,000 years in YouTube time. So I will let you guys go. We'll do another video tomorrow and trade responsibly and have fun tomorrow. Take care, guys.